Hey everyone, welcome back to Grumpy Monkey Trading. My name is Michael. On the show today, we're going to be doing our BananaRama show where we look at Mad Money's Lightning Round stocks and the comments by Jim Cramer and take a look at them from a charting perspective for the ones that were discussed this week. So let's get right into it and start the show. Fitbit, Fit. Kramer says, I think Fitbit, while expensive, represents a terrific way to be able to stay in shape as part of the health and wellness trend. We saw Oprah jump in on the Weight Watchers thing. I think Fitbit is very much the modern way to do things. This is to compete against others and to compete against yourself. I know the stock is expensive, but I think it's not going away as quickly as a lot of people will think it will. It's not a one-trick pony. So, from the actual charting perspective, I look at that and say, hey, this stock is primed for a breakout. We're in a symmetrical triangle pattern, so we have lower highs and higher lows, meaning that we're tightening up to a major decision point. That major decision point probably is November 2nd when the earnings come out. So we're really going to move in one direction or another. Judging from the original trend, which was positive, it could be a break upwards if the results obviously were good or positive, but these trends tend to break in the direction of the original way you got into the trend. My concern for Fitbit is more the long term because I just don't believe that product isn't something that someone else could come in and easily replace and really take that market away. I find them to be quite expensive. And I don't think they look that good either. They look kind of awkward on the wrist. I may be entirely wrong. I just use a simple pedometer or my phone to track things. So I may be totally out to lunch. But short term, certainly they have great name recognition. And if that is positive news on the second, then it's really going to rocket off. For me, I would look at this more as a saddle play for something like options where you take both a positive and negative outlook because one of them is going to come out correct and you hope that it overcompensates for the other one. So interesting stuff. Myl, M-Y-L. Kramer says, they're doing a lot of things that I'm not crazy about. If you take a look at what they're doing with Perego, which you know I really like because I've had them on Mad Money so many times, I just don't like what Mylan's doing. So I would just walk away from it. I'll keep this short and sweet for me as well because this is such a disaster and it's pharma, which I don't generally like getting into. I wouldn't even touch this until it goes above this resistance line with some volume because now we've defined this resistance line, we've gone below it, and we've challenged it a bunch of times and not made it through. That is a super negative sign. Chesapeake Energy, CHK. Kramer just says no. I could maybe expand on that a bit more. Their primary exploration product is natural gas, which is super depressed right now for a couple of reasons. It hasn't been a very cold winter because of El Nino, so the places that typically use natural gas aren't using it, and natural gas is at a historic low. We also get natural gas from pretty much everything, particularly with shale oil coming about. We get natural gas as a byproduct, so supply is really high. And then oil just in general, which they also do, is also depressed. And then the company, not great. So you look at all those factors and you say, you can sum it up in one word. If you look at the chart, we see massive downtrend. Really, you would need some fundamentals to change in those markets before anything could happen with the company. So do you want to wait that out? Probably not. So it's time to move on. There's much better choices in the world. Lionsgate Films, LGF. Kramer says, Lionsgate has had too big of a run for me. I think you will have to wait. I think Disney has just pulled up so much up. I now want to wait until Disney goes back to 108, 109. Kramer must not have a lot of positive feelings for the Hunger Games, which are coming out, or maybe the Vin Diesel Witch Hunter movie to propel this stock to further heights. If I look at the chart, we're in a rising wedge pattern, so we have higher highs and higher lows. That typically runs out of gas eventually, and we break through this lower trend headed downwards. We took a huge engulfing candle right there, but on not a lot of volume, so I expect next week we'll maintain this barrier at least for a little while, but we could break it soon. We're starting getting into that narrowing portion, so keep your eye out. Sprint S. Kramer says, I don't care for Sprint here because I like well-capitalized companies like Verizon and AT&T, or I like the faster-growing T-Mobile, so there is no reason to put my name on Sprint here. There is no reason for him to put his name on a stock that's worth $4.71. It is absolutely way overvalued. I think Sprint obviously has limited opportunities with the market as it is and really needs to merge if they're eventually allowed to. Right now we're in this sort of just glazed horizontal channel, and we will be until some factor kicks it out. People aren't really migrating to Sprint, but Sprint isn't going away either. So something has to change, but there's no way for us to know, so horizontal we be. Micron Technology, MU. Kramer says, Micron went down because Intel announced it was moving aggressively into flash. This is now a stock that is trying to bottom and is not going to be able to succeed, I don't think. Well, everything bottoms out eventually. It's just sometimes that price is zero. I don't think Micron is certainly headed to zero, but I think it is probably headed down still. I don't think it's done on the down. We do have some support and resistance. Certainly if it did plow through this resistance line, that would be a very positive sign, but I think it's more likely to challenge the support line beneath it. One of the reasons for that is that we have this nice 5-wave stochastic pattern. So we have 1, 2, 3, 4, 5, and we're nearing an overbought level, as well as that sort of like a wave pattern recognition thing. So at the end of a 5th wave, we would typically turn around and reverse. So if you have bought it previously and you're like, maybe this is the time I can get out with a little bit of savings, you may want to consider it. Certainly though, it doesn't look good for the long-term future, particularly with Kramer's comments as well. So keep that in mind. DuPont, DD, Kramer says, Nelson Peltz is still there trying to push for change. The stock got hammered after he did not get on the board. I like DuPont, but I've got to tell you, DuPont at 59 is not as good as Dow Chemical is here. And if you heard about Dow Chemical's earnings results, then it went way, way up. So DuPont has also taken a big jump up, which is nice for anyone who owns DuPont. These huge engulfing candles really took off. I hope you got it at 47.5. You probably have a massive smile on your face right now. Obviously, with these weeks of positivity, we're going to start to slow down. So I expect it maybe to hit 62.5 if you're looking for an out period. That would be a good short-term out. Then we're going to have a nice calming rest and relaxation period where there'll be some consolidation, and then we'll think about moving up again, potentially back into the region that it was. So exciting. Hope you got in. Cheniere Energy, LNG. Kramer says, too early. Exxon had a major breakout today. You've got to stick with the major oils. Cheniere will come back, but right now the action is all in the big cap companies, whether it be Chevron or Exxon, the big caps. Certainly, if you look at Cheniere, it's had a massive retraction, looking into oversold territory now, so we can start looking for buying opportunities. I would say like somewhere between the 40, 42 range would be a good option, but if you're chasing, say, dividends, then it's not the greatest stock, and you might want to look at one of those big cap oil stocks as a way of getting back into the oil market for sure. NVDA, NVDA. Kramer says, no, ticker INTC. So Intel, they are moving into that world. I want you to sell NVIDIA and buy Intel. If you want to sell NVIDIA, you're getting a pretty good price, and it's looking actually way overbought. If we look at some of the nice little stochastics and measures that we have an RSI that is into overbought territory. We have stochastics that are not only into overbought territory, but they're past 90 and they're merged together. That is generally a very overbought signal. We have the CCI, which is now turned downwards. So that's a overbought sign as well. Our money flow index is above 80. Indicating overbought, as well as the ultimate oscillator is also above 70, also indicating overbought. So if you want to move into INTC and take Kramer's advice, this is a perfect time to do it, because you're going to expect some sort of retraction, at least into the short term, down to probably 28 or past 28, and then it may have a resurgence. All right, that's our show. Thank you for watching. If you enjoy the show and the program as a whole, please subscribe. It makes a big difference. We'd like to push that number above 100 this show. That would be pretty cool in my book. So see you again next week.